Hi, Warren William here from Smartest Data. These videos are released on a weekly basis where I'll discuss the week ahead with economics, stocks and a review of the portfolios. Okay, clearly last week, inflation was the headline, falling 6.5% year on year, down from 7.1% in November and way off the peak of 9.1% in summer. Okay, in this video we'll discuss economic data to be released and the expectations of the Fed's next move and any indications of a possible policy pivot. Earnings season started last week with the major banks, and I will discuss the key points in their earnings release. The reaction was positive, so it should have been. Earnings will continue to be centre stage this week. Also, I will discuss the progression of the two portfolios, the top 10 stock picks for 2023 and the dogs of the Dow. One pleasing note, I'd like to say thank you. I'm starting to pick up momentum on this channel. Started mid-December with increasing subscribers, views and watch time. So thank you. There are a lot more entertaining videos on YouTube, I know that. So far I've published over 280 videos and the channel is dedicated to improving your understanding of the stock market, stock valuations, earnings reports, so you can build your knowledge and investment skills in the stock market. Your future financial well-being depends on this and help to avoid the scams like FTX. So maybe less entertaining. I know you cannot binge watch these videos, but my objective is to be essential. So with that said, like, subscribe and ring the bell. So following on from last week's data release, consumer inflation, which I would call very positive data on inflation, with headline inflation decreasing further to 6.5%, down from the 7.1% in November, and also core inflation also declining. Key data for this week will be producer price index, retail sales and jobless claims. On Wednesday, PPI is expected to decline and also a decline in retail sales of 0.4% month on month. Thursday will be unemployment data with initial jobless claims forecast to be 207,000. The key focus will be on the dialogue from the Fed and a possible rate increase, which is still expected in February, but now is expected to be 25 basis points, down from the previous expectation of 50 to 75 basis points. The question often proposed, does the Fed want to push the stock market down? No, that's not the mandate, but what they see is the stock market in rally mode, and that indicates a forward or leading indication for economic expectations. Look, if a recession occurs, it'll be an earnings recession, certainly not a balance sheet recession such as 2008. Let's go to stocks. The earnings season opened up on Friday with the major banks, and while the initial trading reaction was negative, once the earnings calls got underway and the numbers were fully digested, the bank stocks and the stock markets closed the week in positive territory. The Dow was up 1.6% on the week, S&P 500 up 2.1%, the Nasdaq up 3.4%, and the small caps Russell 2000 up 4.6% on the week. The bank's earnings reports and numbers on Friday were positive. The major US banks, Bank of America, Wells Fargo, Citi, JP Morgan, showing that income rose across the sector, boosted by the Fed's higher interest rate environment. Let's go through a quick summary. So, higher interest rates, the banks were able to charge higher interest rates on their loans, leading to an increase in the net interest income. There are concerns that the high interest rate environment could lead to a decrease in borrowing and spending. As interest rates rise, banks are also expected to experience an increase in defaults on loans. All the banks made extra provisions for bad loans. Bank of America increased by $400 million, JP Morgan by $2.3 billion, which is a 49% increase on the third quarter. And while banks are getting ahead of the curve, prepping for an economic downturn, their earnings reports do not show a recession in the near future. JP Morgan said that spending on credit cards rose 12% year on year and loans on cards were up 20%. It also said that total loans increased 5% as big and medium-sized businesses borrowed more. On the negative note, the bank's revenue was down $3.8 billion, down 28%. Investment banking revenue was down $1.4 billion, down 57%, and that was driven by lower investment banking fees, down 58%, reflecting lower fees across investment banking. This week will be a big week for earnings with about 80 companies to announce. Some of the key ones will be tomorrow, Tuesday, Goldman Sachs, Morgan Stanley, Wednesday, Alcoa, PNC Bank, Thursday Procter & Gamble, KeyCorp and Friday SLB. So moving on to tech, media and internet companies. They continued with their steady pace to the start of 2023 as much of the sector focused on analyst views of what to expect this year amid growing concerns about the state of the economy. The company focus was on Apple, Disney, AMD and Intel, all were making news and leading market activity. Apple prepares to deliver its quarterly results on the 2nd of February. Apple stated that it's showing more strength from its Apple Store business and a move towards bringing inside more of the production. It might also have plans to dramatically cut the price of their iPods in the near future. I expect earnings to be mixed for Apple. The key will be the guidance on the numbers. I expect that following a terrible 2022, management will aim to bring in some good news. Okay, so moving on to Disney. It also continued with its hectic start to the year as the newly returned Chief Executive Officer Bob Iger found himself under attack by active investors of Tyrion Fund Management. Tyrion filed proxy documents seeking a seat for one of their executives on the Disney Board of Directors. They cited that what they called ongoing issues with Disney's financial performance and direction. Disney is an outstanding company with a terrible performance over the last year. Okay, on to the chip makers. AMD Advanced Micro Devices, they named a new CFO, and both AMD and Intel are on track to deliver quarterly results later this month. Both chip giants saw their shares impacted by negative comments from the stock analysts at Bank of America, who cut their outlook for PC shipments in the first half of 2023. Okay, so here we are in the top 10 stock picks portfolio, and so far you can see this year the portfolio has done quite well, up 6.28%. If we look at the recommendations for the analysts, moderate sells, most of the stocks seem to be there, and a couple on strong sell. But I think the more important one to look at is the earnings ratings. On a strong buy, there's Wells Fargo, Amazon, Google, Nvidia, Qualcomm, and on a buy, there is BAC and Verizon. On a strong sell, there's Caterpillar, and that's the trade that I'm going to do tomorrow, and you can see that impacting on the portfolio next week. I might even do a quick short video on that, but I'm going to sell the Caterpillar shares, which is 407 shares, and buy Apple, which will be around about 770 shares or so. Okay, so here we're going down. You can see the correlation matrix between the various stocks, the asset allocation, and here's a quite interesting graph. So they say here there's around about a 46% upside based on the analyst ratings. So where's the performance so far this year? Well, we can see Amazon's done quite well, up over 14.5%, Nvidia almost 14%, Qualcomm just over 12%, then Wells Fargo, Caterpillar, Verizon. So this is the main reason why I'm sort of moving into Apple. I think the tech stocks are starting to move, and Caterpillar's done quite well. The only one which is down so far this year is Raytheon. Okay, so that's it for the top 10 stock picks. Let's go over to the dogs of the Dow portfolio. Okay, so again, back in FinScreener, it's a great tool to put your portfolios in. So we're in the dogs of the Dow portfolio here, and we can see so far the portfolio has done quite well so far this year, up 5% or so, just a bit over 5%, and it's outperformed the major indexes up to Friday. Okay, so again, most of the stocks seem to be on a hold. Dow, 3M, Amgen, Intel, Walgreens, and then also on a moderate sell, Chevron, IBM, JP Morgan, Verizon and Cisco. If we look at the buy, the strong buys is Dow and Intel, and on the buy is Chevron, IBM, 3M, Verizon and Walgreens. So there we go. So how's the performance so far? Well, Dow's done particularly well, up 16% on the year, Intel 11%, 3M 6.5%, JP Morgan 5.7%, Verizon 4.3%, Amgen 4%, IBM, Cisco, and the two losers so far has been Walgreens and Chevron. Okay, so this portfolio, I'm not making any changes over the year as it was the top 10 stocks at the end of last year.